Hey, what's up everyone, and welcome back. Today is Thursday, March 13th. The S&P 500 was down 1.39%, Dow Jones 1.3%, NASDAQ down 1.96%, and the New York Stock Exchange Composite was down 9.92%. So another day in the red, another day about trade wars and posturing and all that good fun leading to a bunch of negative returns for all of us average folks that are out there. In terms of our top performing strategies, another day with expected return on top. The interesting thing today is you can see that only the top 6 strategies had a positive return, meaning out of the 1,225 test portfolios that are out there, only 6 today produced a return. So if you were in the red today, don't feel too bad. The vast majority of people were. In terms of highest volume for today, Saks Parente Golf, NVIDIA Corporation, Intel had a nice day today if you were an Intel shareholder. As well, Tesla had took a bigger hit today. Once again, talking about some of the back and forth with the trade wars that are going on, or the sort of posturing around all of these tariffs. They are very reliant on resources, materials, minerals from different parts of the world that could be negatively impacted as a result of some of these tariffs. And then, you have the response back, of course, from the other country that has the tariff imposed on them, and then they reciprocate. So that has led to some losses for them and in relation to some of the technology stocks today. In terms of the biggest gains, I had mentioned that Saks Parente Golf, they actually announced a name change to Newton Golf Company and a reverse 30-to-1 split. So they're trying to kind of regroup. I hadn't heard much about this company before the past week or so. I've talked about them a couple times because they keep popping up on these lists out here. So I looked them up a little bit more today, and just for reference, they're down about 97% over the last year in terms of their stock price. So, I talked about it maybe about a week ago that these biggest gains and losses and most volume, it's not necessarily, where to pick your best investments. These are just stocks that they see a lot of volume or they've experienced large gains or large losses. However, one thing you can do when you look at some of these lists and you find an organization like perhaps them, I don't know enough about them in terms of what their future holds, but if you're looking for a stock to short, that's not something that I typically coach. I try to stay away from options and shorts and stick to just strictly stock investing, because to me, that's what's interesting in all of this. I think people that are playing around with options, I think that's almost borderline gambling. Those things are intended for, people that handle large commercial accounts to be able to hedge. And I think it's just, maybe a little bit too risky for me and my risk profile, at least. So I tend to stay away from those. I tend to stay away from shorting stocks. However, if you're looking for stocks to short and you like to do that type of thing, you can monitor these lists to see what pops up here, because chances are you'll see them pop up on the biggest gains and biggest losses lists from time to time, because their stock price might be less than $1. And every day they're experiencing large moves. Now, if you jump on and you want to short a stock, kind of the way to do it is you look for something that's come down consistently over time, and then look to see if Wall Street is beginning to take short positions in that stock as well. And if they have, then it's likely that they also believe that the long-term outlook for that company might not be very positive. So they're kind of jumping on the bandwagon. The only cautionary tale with that is like GameStop, a couple of years ago with the Roaring Kitty and how he, he's a big believer in the organization. Years ago, I worked for EB Games, so for GameStop, and I was a big fan of that organization for a number of years, and I like a lot of the moves that he's done recently in terms of how he's trying to position that company for the future. I just wonder if it's maybe a little bit too little, too late. However, he's been able to hold on and continue to grow his position and position the company to do well. So that, to me, is one instance where Wall Street had a negative position, a short position on a stock, and the stock really kind of turned itself around. But if you are looking for something like that, look for stocks like this that have experienced large losses, and then look at Wall Street to see what they're doing. And if they're already shorting that position for that stock, then, hey, maybe jump on the bandwagon, and that could be a good strategy for you. So let's take a look at our portfolio for today. The return we experienced today was down by about 3.6%, so the market was only down 1.39%. If you recall, yesterday we experienced a larger return than the market, and the market was green So it looks like there's a little bit more variability. We rebalanced our portfolio on Tuesday, and we're seeing larger gains and larger losses. So it'd be interesting to kind of take a look at beta for the portfolio just to see maybe how that compares to the previous portfolio that we had. And maybe that's something that I'll take a look into this weekend, and we could talk about that next week. But overall, we did experience a pretty big loss today for one day, at least in particular. That brings us to week to date. It says we're just above break even. I think we're actually just a little bit below that because the Monday transactions in here I need to jump in and correct, and I just haven't had a little bit of extra time to do that this week. But you can see the trend here has started to kind of collapse back and come back a little bit closer to where the S&P 500 is. But of course, I would say I want to continue to try to stay as close to even as possible, and then try to position myself to start to move into the green as maybe hopefully some of this trade war, tariff discussion stuff as we begin to enter summer quiets down. But we'll see. We're just getting into spring, right? And there's still a lot of positioning and back and forth yet to be had. So something to consider with the portfolio. Today was a large loss. If you were trying to figure out, well, why exactly was that? I mean, we were red across every single one of our positions. But if you take a look at the greater portfolio, and if you think about Tesla, I know they're an auto manufacturer, but if you view them as more of a technology stock, or at least in the technology sector, then you look at, we have Datadog, we have Reddit, and then we have Palantir. So we actually have 4 stocks out of the 10 that are really oriented towards technology. So whenever technology takes a hit, those 4 especially are going to take a little bit bigger hit as well. And then when you think about it and you look back and you see what else we're invested in, there's a lot of consumer discretionary investments in here as well, like Academy Sports and Outdoors. And as we all know, retail is struggling a little bit right now. So we'll see how that does over the course of this year. I mean, me personally, I've seen them invest and open new stores recently. So hopefully they're pretty healthy and in a good position. But we'll see how their stock price does as we go throughout this year. One thing that I did want to mention, I want to go back to the homepage here real quick and talk about some of these different strategies. This week we've talked about how expected return has started to pop, but also how there's very few strategies that are in the positive. So I'm going to go over to the research section here, to the trends area, so that way we can take a look at some of these strategies and the charts that we have in our reporting. Now, if you were to take a look at just last week in general, if you went back to the videos, you'll notice I talked about Trainer's Measure almost every single day. But by the time we ended the week, it was actually Sharpe's Measure that came out on top in terms of, on average, having the best performing strategies. Then looking at last week in terms of portfolio size, it was actually 5 assets that came out on top, with 8 assets not very far behind. And then when you look at return history, it was actually very short term, about 90 days that did the best. But if you're looking for, kind of across the board, it wasn't too bad. It really, from about 5 to 10 years, it was still pretty decent there. Now, if you talk about the S&P 500 going into correction territory today, it's dropped 10 points from its high in February. And looking at the Dow Jones, it's come down quite a bit as well. So we know that this hasn't been a very great year for investments so far. January was a pretty green month, but since then, everything's kind of come downhill since then. However, if you want to take a look at our reporting to figure out, well, what has worked so far this year, and you come over to the year-to-date section, you can see that Sharpe's Measure has actually produced a positive return so far this year. Now, those are the portfolios that uses Sharpe's Measure to select assets. So that has produced a 2.6% return. In terms of portfolio size, you can see that 8 assets has done slightly better than 5, and then better than the 12, the 20, and the 30, although we have seen 20 and 30 make some gains back this week, so I would expect them to close that gap a little bit. But then looking at the return history, you can see that 5 years of history actually worked out the best. And in my sort of 6 years of running this sort of reporting and doing these test funds, I've actually never seen 5 years perform the best out of all the different options, which the only reason I really remember that is if you think about it, if you go to some of those mainstream finance websites that you would typically go to reference news stories or look up a stock quote, and you do that, enter in a stock, enter in Tesla, and it's going to show you a beta. How much time period, how much history is in that beta? Chances are, if you look at the website, it's not going to tell you. And you're going to sit there and tell me, Matt, I don't care. I've never even thought about that. What are you talking about? That's one of the things that we test here is the historical time period that you're including in that data in order to construct that metric. So if you were to take a look at year to date, it looks like 8 years of history and 5 assets has performed the best. Now, across the board for the overall average, 8 has, because 5 years of history, 10 years of history, and 15 years of history are all positive, where only this one with 5 assets is at the positive. But knowing that Sharps measure is the top performing strategy, we can come down here to the Sharps measure charts, and we can see that with relation to portfolio size, the best performing metrics or the best performing portfolios had 5 or 8 assets, with 5 holding the lead. Then when you look at the return history, you can see that 5 years of history had the best return, but then from 8 to 15 years also had a pretty good return. Then when you get into the optimization frequency, it's telling you that you need to rebalance about every 2 weeks. And if you think about our portfolio and our strategy, the last few days we've experienced gains. Not today, but the last few days we've actually done all right. What we did is we rebalanced on Monday, or actually, excuse me, we rebalanced on Tuesday, which was about 2 weeks after we built our initial portfolio. Now, if you've watched these lessons, you'll know that I'm not a big day trader. I don't like that. To me, I don't want to jump in and out of the market all day long. That's a lot of effort. That's a lot of work. There's a lot of news and headlines and things that you need to track in order to do that. That's not my MO. I want it like that oven from back in the day, that infomercial, if you were around in the 90s and 2000s, that sort of set it and forget it type of strategy. That's really my vision with all of this is, how can I be lazy with it? How can I do as little work as possible? And you can kind of sort of do that by knowing how to pick your assets, by knowing what strategies are working. And if you're going to sit here and tell me, well, Matt, okay, just because you have some test strategies, how do you know that, I have to use Sharps measure, I have to use Trainer's measure? The truth is, I don't. All that these charts and test funds are telling me is where is Wall Street moving their money, and when they're moving it to those areas, what are the identifiers that are raising the green flag and telling me, hey, this is the identifier that is following the money. And for last week, it was Sharps measure. For this week, it seems to be expected return. There can be a variety of reasons why, and I'm going to attempt to give an explanation here and there. But ultimately, all of this is just to try to figure out where is Wall Street moving their money and why. So that way, when I jump in here and I'm managing my own personal portfolio, I can make better decisions and I can feel comfortable with sort of more of that set it and forget it or lazy kind of strategy. So anyways, that was just one of the topics that I wanted to talk about today and show you some of these charts in here. I probably need to figure out with some of this, casting technology, how I zoom into different spots or show things a little bit better. But, just stay with me here. I'll get better over time with all this different technology. I'm still getting used to using it, but certainly I do appreciate you being here. I appreciate you sticking around. If you haven't already, be sure to subscribe down below, and I would greatly appreciate it if you could help my channel grow by liking this video and sharing it in order to get the message out there. And if you haven't already, be sure to check out portfolioexaminer.com. You can sign up for a free account and try out all of this for yourself. Until tomorrow, I'm Matt Franklin. Have a great night.